I'm John Ozzie, Head of Training and Development at AudaCity Capital. Today, I'll be presenting the Mindset and Psychology webinar, where I'll be talking about some of the common problems I've encountered with traders over the last few months, reviewing their FTP accounts and their HTP accounts, some insights into trading, some tips, and general Q&As as well on what you want to know about me, what you want to know about trading. And after I've gone through the slides, there's 68 slides in total. I'll be going through 17 slides at a time, and I'll take 3 breaks in between to refresh and reset the webinar. So after the first 17 slides, I'll take a short 60-second break to refresh, get some water, get some hydration, and I'll start again. So at slide 17, 34, and 68, I'll be taking regular interval breaks. And after slide 68, I'll take a 2-minute break and I'll open the floor to Q&A and some questions and answers. And I'll let Leah open it up where you guys will be able to ask me questions live on the webinar. So I'll unmute everyone's mics and we'll take them in turns. So thank you everyone for turning up. And like I said, and I promised you guys on the app, this webinar will be very different compared to the other webinars I've done. So I hope you guys find value from the webinars I do. And if you do find value in the content I share and you like the knowledge and the experience I bring to the table, all I ask is please leave a positive feedback or positive review on the AudaCity community app. And this just makes me more inspired and more motivated to bring you guys more content. So without further ado, I'm going to start now. You know the house rules. Any questions, please put them in the chat box while Leah will be moderating on the back end, taking all the questions, and I'll be answering all the questions, and I'll try my best to go through every single question to the very end. So thank you for your time, and we start the webinar in 5, 4, 3, 2, 1. Let's go. Is that okay? Is that louder? Are we good? Okay. Okay, let's go. Let's just get the sound right. Okay, first slide. We're talking about protecting your capital when you're trading. A lot of traders, when they open a position on the market, protecting your capital, that's protecting your money. How do you protect your money? How do you, when you take a position on maybe the euro pound or the euro yen, your money's at risk. So you have to treat your money with respect and care. Make a plan on how you're going to use it. Use your money very well, you win. If you don't have good money management techniques, which is poor money management, you lose. And your capital is at risk if you're not protecting it. How do we protect our capital? We protect our capital using a stop loss and having a trading plan. So when you get into the market, you always need to understand why are you going into the market. Also, when you're going into the market, you need to predetermine how much of your capital are you going to risk going into that position. And more importantly, you have to understand where you're going to exit the market. As I always teach on the Hidden Talents program and on my one-to-one mentoring sessions, the rule of thumb is to always risk always risk a percentage of your capital and always look for 2 times your risk. So for example, if you're risking $100 on a particular trade, so your entry, you found your entry into the market, you do your lot size calculation, you're risking $100. So no matter what happens, you're not going to lose more than $100. So if you know your entry and you know your risk, which is your $100, then your exit should be 2 times that. Your take profit should be $200. So just basic rule of thumb, 2 to 1. Moving on. The psychology of trading. When you actually press that button or that trigger to take a trade, you go through a number of emotions: and anxiety, thrill, anger, optimism, despair, hope, victorious, and excitement. And anxiety, for example, you take a position, you've not planned it properly. You see like gold is dropping or the euro US dollar is going up based on the FOMC announcement. So you don't want to miss out. So straight away you jump into the position, okay, I'm going to make a few pips. But all of a sudden now the market spikes against you and now you're in negative territory. So you don't know what to do. So that brings an anxiety, and an anxiety will make you uncomfortable, and then you start getting to the FOMO mode and start making unreal decisions. And now you're a gambler. The thrill, that's kind of the opposite of an anxiety. So let's say you had an anxiety before, and for some odd reason, the market came back into your favor and you closed your position in profit. And you said, wow, that was quite a trade I took there. But you got that thrill, you got that excitement. Yeah, I want to do it again. So this is what the thrill is. It's like the over trading syndrome. So it's always best to try and control that, because if you have a trading plan in place, you will never experience an anxiety thrill. And again, more importantly, if you don't succeed in your trade, that brings to anger. You're angry. Oh, why did I take that position? I knew I was wrong. I could have avoided it. What if, would have, should have? That's not right, because all these emotions only bring to failure. And optimism, oh yeah, the market will pull back. Okay, no, I just needed to hit a certain level of support. And I need the market to hit a certain level of support and it'll come back to my position. But sometimes the market doesn't do that. So optimism is not really the way to go. So having a solid trading plan, taking good risk to reward ratios will always put you on the positive side. And when you have a positive mindset and you've got that psychological advantage, this is the whole point of the psychology webinar, is victory. And you have hope and you can get more confident. So the more you trade, the more confident you come when you make consistent pips. As a trader, you need to understand what can you control. These are the 4 things that every trader can control to reduce risk. First of all, risk. How much are you risking on a position? We used $100 as an example. What is the cost if we lose that $100? Time. We can control the time we're in the market, the time we're out of the market, the time we're waiting for our trade to take profit. All of it is in our control. Behavior, mindset. This is all down to our control. So risk, cost, time, and behavior are 4 things we can control to give us the right results in trading. So not controlling any one of these things exposes us to uncertainty and failure. What don't we control? We cannot control the return the market gives us. We need to focus on return in the sense that sometimes the market will not always give us our 2-to-1, our 3-to-1, or 4-to-1. But what we can do is control the trade. I have a concept. The moment you enter the position, for example, if your stop loss is 50 pips, you're risking $100. The moment the market is 25 pips in profit, you move your stop loss to half the size. And when the market is in position by another 50 pips, which is ratio 1-to-1, you move your stop loss to entry level. So whatever happens, you will break even. You're not going to lose your money. So you've covered the risk. The cost now is not cost you nothing to move your stop loss to break even. Time-wise, your time is rewarded with the value you get from having a positive trade, and behavior mindset is what you control. And that makes you a successful, calm, and consistent trader with a psychological advantage. Traders need to learn the patience art of being patient, because opening one trade is important. But when you're opening several trades with no plan and no direction, is a disaster. So as I say here, it deserves your best, and use your best analysis and your best judgment in making all your trades succeed. Because the hardest part of a trader is to actually analyze the market. That's the hard work. And if you're spending hours analyzing the market, make sure you get paid for that time. And getting paid for that time is your profit in pips. Some traders they're in trades and they're in profit, but they get greedy. And being greedy now, the trade goes the other way and you have nothing to show for the hard work. So overtrading is a common theme I've seen over the last few months. We're going into June, so halfway through the year, over the last 5 months, going to 6 months, I've seen a lot of traders overtrading. And that's a habit that can be changed and can be cultivated by taking these few tips on board, because I believe everybody can trade successfully. The only problem with traders is that they make bad decisions in coming out of the market, getting into the market, and having inappropriate lot sizes. I've had an experience of reviewing some accounts where I've seen traders trade with 10 lots on a low account. That is gambling. I have traders who've been trading without stop losses. That's another thing. That's leaving you in a position of uncertainty. So all these things can be avoided. And like I said, protection is key. Like I said at the beginning of this webinar, always protect your capital. When you're in doubt and you're not sure price action is going your way, for example, price action is showing you you're in a long position or short position, but you're indecisive, stay out of the market. There will be another day. The markets are not going anywhere. There's always other pairs and other opportunities to trade the markets. So always remember, there's always another day. Do not throw all your capital on one position. If you don't see it, let it be. You'd rather have a few trades with consistency than having hundreds of trades with losses. How do you develop a trading routine? A trading routine is very important because having a trading routine keeps you disciplined. Discipline is a foundational concept of being a successful trader, because being disciplined, you stay up to date with the major economic and political events. You look through the major indices and sectors of the market to see what's going on and how that will affect the major FX pairs you're trading. You can scan for stocks and FX pairs that fit your strategy, because what people don't understand, Forex and stocks go hand in hand. For example, if you're looking at the Dow Jones, all the stocks on the Dow Jones are pegged with the US dollar. So if you see the Dow Jones, all the stocks are going up, it shows you that we have a strong US dollar. So that will give you an insight and direction on what's going on with the US dollar against its other counterparts. So that's an example. You can build a watch list of stocks in play or FX pairs and make a trading plan for each stock and each FX pair, because not just FX this webinar applies to. This webinar applies to any financial instrument, crypto, stocks, ETFs, indexes, and Forex. But at AudaCity Capital, we focus on FX. Execute a trading plan without hesitation. So when you want to get into the market, you know how much you're willing to lose, and you know your exit, that's a perfect execution. So it's just rinse, repeat. But how do we understand how to get onto the market effectively and efficiently? So market entry is a concept on its own. It's a skill on its own. And on the Hidden Talents program and on the Fast Track program, which is where people who are on the FTP who want to be mentored by me and need some help in hitting their 10% and becoming consistent with their strategy, they come onto the Fast Track program or onto the HTP. And I go in depth on trading strategies, how to get optimum entries into the market. You have to review your trades and find out what works for you and what doesn't. With trading, as I always say on my reviews, you can be right, you can be wrong. By the end of the day, you can still make money. So you don't have to be on the right side of the market. You can be on the wrong side of the market and still make money. The most important thing is how to get out of the market consistently with profit and minimizing your losses. With the risk management process, identify risk. If you're trading the euro yen, for example, what risk does this pair expose to you? Are there any fundamental releases coming out from Japan that have got high impact events on the Forex calendar? Is there anything going on with the euro? Are you at a support and resistance level? Are you at a key demand or supply level? Are you trading in the middle of the market? What is the market structure like? So you have to assess the risk. Control. You can control the risk by having a stop loss. By putting a stop loss in place, you control the maximum amount of damage you're willing to put on your trading account by controlling the risk and how much you're willing to lose. Review your controls. Reviewing your controls are simple. Just three simple concepts: understanding when you're getting into the market, when you're getting out of the market, and more importantly, when you're going to exit the market. How to grow your account? This is an interesting part. People ask me this question all the time. Always use the same lot size if you can consistently, because consistency and discipline is key to getting 10%. I've seen a lot of traders over the last year and a half, especially during the pandemic, using various lot sizes. But the most successful traders I've come across have always kept the same lot size consistent. For example, you've got $15,000 you're managing. So let's say you make 5%, trading 0.10. Keep on doing that 0.10 till you get to about 4%. Then that way you kind of like have a bit of capital above your available capital. Let's say you've got 5% above your 15,000, which is 750. Then once you've got half of your target, then you can probably go up to 0.20 or 0.25 or risk a certain amount. Maybe the maximum available is 0.5. So even if you're having losses, you can control the balance. And more importantly, always initiate 2 to 1, 2 times your stop loss. So as you're losing trades, your account is not taking a big deficit. And as you're gaining trades, you're always making 2 times what you lost previously. So that's a good money management technique, which I always explain on the Hidden Talents program. And I have explained that on a few webinars in the past. So maybe in a future webinar, I will show you guys how I trade, or if I do a Q&A, and I can show you how to implement that strategy as well. Or I can just put a short video on the AudaCity community app showing you this example. Always use a tight stop loss. Depending on the FX pair you're trading, different pairs have different characteristics. So for example, if you're trading the Euro US dollar on a daily time frame, you can probably get away with a stop loss of about 40 to 45 pips or less if you get it at a key level. But if you're trading something like the pound AUD or the pound Kiwi, you might need about 100 or 80 more to protect you. So always keep the stop loss tight. Do not trade a volatile pair with 10 pips or 20 pips on a lower time frame like 15-30, because you will get taken out by a stop hunt or liquidity hunt, which is an advanced strategy that I do teach on the Hidden Talents program. So always keep a tight stop loss and always try and make sure you get 2 to 1, and that will always get you out of trouble. Some of the biggest mistakes traders make: having no stop loss. I say this all the time. No stop loss presents a very big risk. What if the market gaps, you have a no stop loss position and you go to bed overnight? So you've got a bigger loss than expected because you've not put a limit on the maximum you can lose. So you end up holding this position and hoping the trade goes in your direction. But unfortunately, it's like a big wave, like you've thrown a stone in the ocean and the stone is just dropping till it hits the bottom, till you can't even see the stone in visual sight. So that's just like your trading capital. This is one way people blow their accounts indefinitely. Over trading, higher chance of losing, performing optimally due to emotionally overwhelmed, placing oversized positions, as I mentioned before. When you're over emotional and you haven't got that psychological advantage, you're not calm when you're taking a trade, you're going to leave yourself open to errors and clarity will not be clear. You will not be seeing a clear position. So what you're seeing now is something else. You're looking at the money instead of the pips. I'll give you one tip here, and one thing I'll recommend with my experience and years of trading. Do not focus on the dollars, focus on the pips. If you can get 40 pips consistently, no matter what time frame and strategy, just keep on repeating it on a daily basis till it becomes a habit. Then challenge yourself for 80 pips consistently. And when you keep on going for 80 pips, then challenge yourself for 100. So what you're doing over time, just like going to the gym and lifting weights, you're building your mental capacity, your mental intelligence. You're building that discipline. No matter what I do, I can always get 40 pips in the market. So as you get 40 pips, then you can get 80 pips, then you can get 100 pips. Let's use a simple example. Some of you on this webinar drive cars, right? So when you're driving cars, depending on the road condition, You know, some roads you do 20 miles an hour, some roads you do 100 miles an hour, depending on the vehicle you've got. So let's think of your vehicle as your capital. Some people have Ferraris, some people have Bentleys, and some people have Polos, and some people have standard Hondas. But all these vehicles can drive at a higher speed, at a higher rate. Well, the most important thing for you guys is being the driver is control the vehicle. So let's look at your trading account as your vehicle. Always control the vehicle you drive. Use the rule of 40, 80, 120. Simple concept. Get 40 pips consistently. Once you do that 4 or 5 times, move on to 80 pips consistently. And once you do that, challenge yourself onto 120. Then I guarantee you get more consistent results with your trading, no matter if you're in a bad position or you're in the right position. Remember, as I always say, you can be right or wrong in trading, but you can always leave the market with profit because the market is very liquid to give you the opportunity to make your 10%. The trick is, the rule of thumb is to get your 10% on the Hidden Talents program and the FTP is only 300 pips multiplied by the maximum lot size allocated to you on the level you're on. So for example, if you're on 15,000, all you need is 300 pips times 0.5, which is $1,500, which gives you your 10%. So the problem and the question is, how do you go about getting these 300 pips? Do you go for the maximum lot size 0.5 to hit 300 pips? Or do you go at 0.10, where I'm taking a good money management technique with 2 to 1 to get you there faster or slowly or over time? That's down to your experience. That's down to your strategy. That's down to your knowledge of the market. And again, that's more or less down to your support as well. Psychology of trading, this is the same thing I'll come back to as I mentioned before again. Anxiety, thrill, anger, excitement, victorious, hope, despair, and optimism. And these are the 7 things we just covered. Your trade can end in 4 ways: a large win, a small win, break even, or a small stop, a small loss. At the end of the day, I'll take any one of the 3. Sometimes you can get a large win, that's great. Sometimes you can get a small win due to a retracement, that's fine. Break even, fine. I'll take the first 3 than taking the last one, a small loss. If I can help it, I'll go for break even if the market is against me. But if I can't get break even and I get a small loss, that's still good. I'll still get to see another day. Destructive trading habits. These are some of the habits that destroy us as traders. And once you have these habits, some of these habits are very hard to break. It's virtually impossible. You're going to need a mentor or coach, or you're going to need to invest in some sort of program to help you break these negative mindsets, because you have to be realistic to yourself as a trader. Because if you're doing the same thing over and over and over again, the same results, you clearly need help. Just like if you're ill, and you've got a migraine, you're taking Panadol, or you're taking ibuprofen, or you're taking a painkiller for so long, and you still have that consistent headache for a week and a half, you're going to need help and go to a doctor. So trading is the same thing as well. If you're not getting the same results by yourself, or getting any improvement, you definitely need help. So I hope this webinar is a first part of that stage of traders getting help. And as a trader as well, some of us traders have pride. Some of us don't want to admit that we got help because, oh, I'm a good trader. I don't want this person to feel I'm not a good trader or whatsoever. In this business, it's not really about competition like that. Competing on that level will never make you a successful trader. Humble yourself, get the right help you need, and if anything, keep your mouth shut. Don't go on Instagram or on social media saying you made this position or that position. If you are sharing your positions, come with a bit of positivity and explain why you've done it. Oh, anyone got any ideas or insight on how I can make it better? Network. This is why we created the AudaCity Community app, to help traders break that bridge and network with other traders, taking away the social media aspect of showing up with material needs and luxurious cars, yachts, holidays, Bugattis, watches, model chicks, and whatsoever. So destructive habits now. Trading with negative emotions can can promote revenge trading, FOMO, one of the biggest things I've seen in the last few weeks, and more recently on a few accounts I'm about to review to this later on this evening. Some traders try to force trades. When you look at the market, you do your top-down analysis, maybe from the daily time frame to the 4-hour time frame to the half-an-hour time frame, and down to the 1-hour time frame. You cannot see your setup. Leave it alone. It only takes about 2 to 3 minutes to see a valid setup. But if you're spending more than 3 minutes or over 5 minutes looking at a chart, trying to find position, then clearly you're trying to force a trade. And this will always increase losses and stress. And later on the webinar, I'll show you a simple and easy technique to avoid forcing trades. Using too much margin, that's what we mentioned before, oversized positions. Okay, I'm down by not even 10%. No, I'm down by 15%. I'm actually in double drawdown below my $15,000. So I need to start taking bigger positions now to make up my deficit. You can do that if you've got a bit of experience and you're a disciplined trader. But if you're just starting out your journey as a trader and you haven't got that mental mindset and discipline to be using oversized positions and getting away with it, you're going to blow your account. I'm not encouraging people to use oversized positions to catch up on a losing trade, but people can get away with it. And these people who get away with it have got a high tolerance for risk, and they've got a very disciplined mindset with a psychological advantage. And the traders I've seen doing this are very successful, but it's not something I recommend. It's just like me saying drive a Ferrari with one hand at 120 miles an hour. Chances are 1 in 5 people can do it successfully. But as a new driver, someone who's never driven a Ferrari, chances are you're probably going to hit somebody or damage the car or crash the car and have uncertainty waiting for you on the other side. So all these things can be avoided. Taking losses personally. Trading does contribute to mental health. When you're taking losses personal, it's down to bad money management. This is a business. Trading should be fun. Don't let personal losses destroy your mental health, because it will destroy your mental health, which will destroy your psychological mindset and all aspects of your life. And you say, oh, trading is not for me. Trading is gambling. Oh, I've been trading. I'm not making money no more on trading, vice versa. So this is what trading can do for you if you don't have control. So I felt it's very important to have a different concept and a different trading mindset altogether by using the psychological mindset approach, because I believe it will make a lot of difference and it will help a lot of traders as well moving forward. So going forward, this is the way forward, and I believe you'll be very successful if you take these tips on board when you're trading the markets. When you're in doubt and you're unsure, price action is showing you to go long or short, as I said before. The markets are not going anywhere. There are a lot of positions and opportunities there for you. So always remember that. Now, going on to the first part of the second section, what is a trading plan? So I'm just going to take a little short 2-minute break and I'll be right back. Okay, I'm back. Can everyone hear me? Are we all good? Are we all good? Can you hear me? Okay. Now, second part of the webinar. What is a trading plan? A trading plan is very effective in helping you combat all the problems I just mentioned in the first part of the webinar. So, how do we create an effective trading plan? So, just one second. How do we create an effective trading plan? So what is a trading plan? A trading plan is a roadmap for how to trade, and no trade should be placed without a well-structured or shaped trading plan, because without having a trading plan, you're putting yourself in a situation to fail. So it's very important you have a trading plan moving forward. So what is a trading plan? A plan is written down and followed, and it's not altered unless it's found not to work, or in other words, not making money for you. So as a trader, you can only find ways to improve your plan, not necessarily deviating from your plan. So for example, if you want to trade the pound Japanese yen, okay, I want to trade the pound Japanese yen on the 8-hour time frame. I only want to trade engulfing candlesticks. So I can put my plan, like, for example, I've got an example of a trading plan, which I'll share with you on this webinar. So rest assured. So the trading plan, so 1 pound yen, that's my pair. Time frame, 8-hour chart. Pattern, engulfing candlestick pattern. Strategy, I only want to trade engulfing candlestick. That's my strategy. My method, 2 to 1. And find it at an area of confluence, maybe support and resistance. So just 5 things. So if I'm looking at a pair and I can't find these 5 things, I'm not going to trade. That's just an example. 3, a basic trading plan includes entry and exit rules, as well as risk management and position sizing. So there's no trading plan without an entry, an exit, analyzing your risk, how much you're willing to lose, and position size your lot sizes. So you cannot have a trading plan without these 4 things. How to make an excellent trading plan? Entry signals, exit signals, risk level, that's your stop loss, your desired market. What market do you like to trade? FX market, crypto market, ETFs, or whatever you want to trade. It's all down to you. Your watch list, based on what you desire and your entry and your exit and your risk level, you create a watch list. You have your stop losses in place. You have your take profit levels, your exit potential levels. You check your FX calendar for news events, and your discipline reminders. Oh, hold yourself accountable. Things you do to control yourself, not to overtrade and not to FOMO, and not to put yourself in a situation of uncertainty. This is a trade checklist I made up a little while ago, and it's very simple and very easy, and you can take this as an example. First, I like to find the top currency pair, the time frame I'll be trading, what direction am I trading, sideways, bullish, or bearish? Are there any major news releases ahead that can affect my position? My strategies, what's my chart pattern? Is there a price rejection? Is there any correlation? Is there volume price analysis? And what's the sentiment of my analysis? When I say volume price analysis, I'm going a bit advanced here. This is where I talk about the Wyckoff theory, or using supply and demand, or order flow, order blocks, and other complicated strategies, which I don't teach on the Hidden Talents program, but I do teach it to people who reach out to me on the fast track, who are managing over 6 figures. So if you're managing over 120,000 US dollars in company funding and you're on the fast track, people like Vladislav, I do teach these advanced strategies too. And you've seen my interviews with him, and there's a whole lot more interviews and stories and projects coming together with what I've been working with on the back end with Vladislav. And I always tell people, and I like to use Vladislav as a testimony, and I like to use him as a good example. You can learn how to trade, and Vladislav is a student of my work, because everything I'm talking about, he practices, and he's becoming a better trader in response, because before he started trading, I never met him. He got to 500,000 in company funds by himself. Only when he got to 240,000, he reached out to me. We built a relationship, and I mentor him and I help him to maintain that level of consistency, because it's very easy, believe it or not, to get to the top. But when you're at the top, how do you maintain that success, that consistency under pressure? in a volatile environment, it's very hard to maintain a winning position. So this is where you need support. And I've always offered that relationship and that support to traders who are on 240,000 US dollars to reach out to me and I'll support you. So moving on, money and risk management, equity exposure. How much equity, how much capital are you putting on the market? What's your entry point? What's your stop loss target? What's your take profit target? And what is your risk reward ratio? Always minimum 2-1. As you start getting 2-1 more consistently, I challenge people to go to 3-1 and 3.5-1. And this is where the consistency comes in making money on the financial markets. I feel good. I am indifferent. I'm in doubt. I feel bad. This is a trading psychology. Section D is important compared to every other section here, because if you're not all right in the head, and if you haven't got the right mindset, you're not going to be ABC will not click. And remember, ABC plus D is the result. Premature stop loss hit, or take profit. If you follow everything, ABC, and you master D, your only result should be take profit consistently. When you trade in the FX markets, these are a few checklists you can use, and I use this as FX checklist 101. My setup meets all my entry criteria. The trade is within my trading plan. The trade is in the direction of the trend. There are no major news events ahead. My risk reward of the setup is acceptable. I am fine emotionally to make a decision to make this trade. My risk and leverage stays conservative. I'm ready to accept a losing trade. These are things you need to consider when taking a trade, and I'll just go back to it one more time. The setup meets all my criteria. Number 2, the trade is within my trading plan. Number 3, the trading is in the direction of the trend. Number 4, no major news events ahead. Number 5, risk reward of the setup is acceptable. Number 6, I am fine emotionally to make a decision. Number 7, my risk and leverage stays conservative. And number 8, I'm ready to accept a losing trade. How can you be a disciplined trader? Wake up early in the morning, early rise, early shine. Early bird catches the worm, as they always say. Maybe you want to trade the London Open or you want to trade the Asian Open. That's an option. You have to be willing to accept a loss. In this business, you have to accept you're not going to be right all the time. So have that mindset to accept a potential loss, because I have losses myself. But overall, I still maintain consistent profit. Study versus party. If you're that person who wants to go to the pub, go to the bar, who wants to go on holidays and party, that's fine. But you have to have it down to moderation. Spend more time studying than actually having your social activities. That will help you build your discipline. Keep your emotions in check, very important. Stay dedicated to your journey of being a successful, consistent trader. It will definitely make the journey more viable and worthwhile at the end. Hold yourself accountable for all actions, all your decisions, because accountability is key. If you hold yourself accountable, you know where you're going wrong. And if you're honest with yourself, you clearly know you're on the right path to being a successful trader. What habits a trader must have? 1, focus on making money, not proving they're right. Just focus on making the pips, making the money. Stop telling people, oh, I was right about this trade. I was right about that trade. Just focus on the money. The success will come indefinitely. Master your emotions. Be a robot in your approach. Top down and a bullish pin bar, 8-hour time frame, candle close, setup 2-1, execute. Routine equals results. Just be very consistent with that. And I guarantee success as well, because I know traders and I have traders who follow this approach and they get the consistent results. Be patient with your winners and cut your losses short. How do you know when to cut your losses short? This is something I do teach on the Hidden Talents program, and it's something I'll share on this webinar as well. Sometimes you have to just understand the basic candlestick patterns. Once you understand candlesticks is simple. It's a relationship between price, bulls and bears. So if you see a market going bullish, and all of a sudden you see a wicked rejection, it shows you that the dynamic, the market sentiment is shifting. And I'll share that with you on this webinar. Plan your trades before you execute them. It's just like playing football. It's just like playing any sport. Vision your goal before you execute the action. Because when you visualize your goal, executing the action is very easy because you've covered all the bases and you're not going to get any surprises because you've already factored in uncertainty and the ability for anything to disrupt your trading strategy. So that's something I'll consider very highly. Technical analysis. Technical analysis, you're always going to see this in trading, any financial instrument. They say the trend is your friend. So you have three sorts of trends. You have uptrend, you have a consolidation, and you have a bearish trend. And in the trend, you have different ways of trading the market. You can trade through a consolidation, which could be a flag. You can trade a breakout. You can trade, a reversal. There are different ways. But technical analysis is very key. And towards the end of this webinar as well, I recommend the top 7 books in my library that I use and I recommend to my top traders to use to help you get to a very high level of discipline and consistency with your trading. Knowledge is key in this business, not just about clicking the mouse and taking a position. So towards the end of this webinar, I'll be sharing some books. They are quite pricey, but you can get them on Amazon and you can get them on the internet. Not that I'm saying download from any website or anything like that, but these books are available all over the internet. Invest in your time in getting these books and study these books. I got this concept I tell my traders. When you're not trading, make sure you're studying. And when you're not studying, make sure you're trading. So either way, you're making money, because if you're either making money straight away or you're preparing yourself to make money at a later date. Because a knowledgeable trader is not a losing trader. Understanding market structure, that's a key thing a lot of traders fail to understand. For example, number 1, a trend line has been broken. And you see after the trend line has been broken, a key level has been broken, that's a structure being broken. Then you decide to go short. And when you go short, the market hits a level and decides to retrace about 50% to retest the initial break of the structure. And at that retest, the market can either try and break out to go back to the upside, which is the extension, or the market can go back in the original direction and continue in a downward trend. So market structure is very important. Price action. Price action is a technique in which a trader reads price and volume charts and makes subjective trading decisions instead of relying on indicators as well. I don't trade with indicators because I studied maths at university and I can tell you indicators lag. I study price and a few other things, but I will not give away all my tricks. But I will tell you my main decisive decision maker is actually price, no indicators. You have chart patterns. A chart pattern is a pattern within a chart that shows you the way the structure of pricing, FX, commodities, crypto, whatsoever. Once you understand certain chart patterns, you know when to get in the market and when to get out of the market. There are 2 main patterns I use in my technique and very simple. I like to keep it very simple. That's the M and W pattern. And the M pattern is a W top and the W pattern is a double bottom. These are 2 effective patterns I use. And when I find them, I execute just like a robot. Support and resistance. Support basically is the lowest point where the markets reach. And this is the area of demand where you want to be buying into the market. Price is cheap. That's why it's at a support level. When price hits a resistance, people want to take profit. Price is expensive. So we want to sell there. And this is where we tend to see wicks and indecisions and other reversal patterns. So in trading, support and resistance are predetermined levels of price of a security where it's hit its peak and it's hit its lowest point, and multiple touches show us how strong a level is. Identifying Fibonacci retracement. As I said before, Fibonacci retracements are another part of technical analysis. Fibonacci retracement shows us the behavior of price over time. When price has fallen from a trend, price would then tend to retest the level of structure that it broke. So Fibonacci retracements are pretty good for using ideal entry points. The 61.8 is an ideal level to sell, or the 78.6. And Fibonacci levels range from 0 to 100, and I like to target the extension, which is the 1.618% level, or the minus 1.618% level on the bearish side. So Fibonacci levels are very ideal for entries into the market. That's one of my entry techniques. Supply and demand zones. I will not go too in depth into supply and demand, but it's another concept I use in entering and exiting the markets. Supply and demand is it's not exactly resistance, support and resistance. Think of supply and demand in the form of M and W, because supply is the point where price is reached and there's a lot of sellers in the market. The way supply and demand works, just to summarize it, when the market is ranging, that's where institutions are building up their positions. Then that big impulsive move is the supply zone from the resistance level. And when price gets to a level of support, price will range and build up again and form an upward impulsive move, which is from a demand level. And we use price patterns to get there. So supply and demand come in different forms. There are four main forms: rally-based drop, drop-based rally, and the other two, which you can find on the net, but I don't really want to go too in depth in detail. But if you go and check YouTube videos and you study supply and demand, one of the books that I recommend for studying supply and demand will be on the webinar towards the end. It's a very key concept and very effective to have you have very low risk rewards and high reward trades. Supply and demand, as you can see on the bullish side, you have base, rally, rally, and you have drop base rally, drop base drop on the supply zone. Support versus demand, big difference. As you can see, support is multiple touches. Demand, you can see where orders are being built up to rally up to form an impulsive move. Risk to reward, as I mentioned before, look at three scenarios. Here we're risking one to get three. Second, that's a very strong move. Second, we're risking one to get two, which is strong. But when you're risking 1 to 1, that's very weak. So I recommend you either have 2 to 1 or 3 to 1, which is very effective. And these are strategies and techniques I definitely teach on the mentoring program, which is Fast Track, and on the Hidden Talents program. And everything I'm sharing this evening tonight is just for information and educational purposes. I'm not making trade recommendations. I'm just sharing education. I'm just showing you concepts and tips and what I've observed over the last 6 months, reviewing accounts on the FTP and HTP traders and the mistakes they make. And I hope at the end of the presentation, people can take some value from this and learn. Now, the M&W pattern, before I take a short break. The M&W pattern is basically a double top and a double bottom formation. We have two peaks on the M, and you have the neckline, which is the support, which is the breakout. And as you can see from below here. And on the other side, you've got the double bottom, where you have the W shape, where we have support on the bottom side and on the other previous bottom side. So these are all effective ways of trading the market. But they're very effective, but do your own research. But these patterns work very well for me and for traders I've taught. Now, how do you plan your trade? Let's make this very simple and summarize some of the concepts I've covered so far into a flow diagram. Before you start the trade, what's the trend? Is it bullish? We move on to the left-hand side. That's great. Is price at a support level? Yes, we buy the trade. On the right-hand side, is price at a support level? No, we don't trade. Let's go back again and start again. Before you take a trade, what is the trend? The market's sideways. Okay. We wait for a breakout. Has the market broken out? Yes, we take a position. Has the market broken out? No, we don't trade. It's that simple. We go back again. Third scenario, what's the trend? Market is bearish. Okay. Is price at resistance? Yes. So we can sell. Is price at resistance? No. So we don't trade. This is a simple flow chart diagram to get you out of trouble. And this summarizes all the points I've just covered over the last 38 slides. So we're just going to get to 40 and I'll take another little short break. Swing trading. Swing trading is a very good technique of racking up 70 to 100 pips. It's like holding a position over 2 to 3 days. On the FTP and HTP, I recommend you do not hold a trade for more than 2 to 3 days due to the volatility and fundamental releases. So a day or two, free. If you're in a position and you're not in profit by a day and a half or two, start looking to exit the position. Because if it's not in profit by a day or two, chances are you haven't done your homework properly. So trade entry, trade exit. It's very simple. Candlestick signals. Before we take the break, look at the candlestick signal. We got a big body showing a bearish pin bar here, indecision. So it's a downside after a long waiting for a big fall. Doji, not sure. The market can't decide if the market is going up or down, indecision. And if you find this indecision at the top at resistance level, it's very effective. If you find it in the middle, make sure you add more confluence, more reasons to validate that trade. And if you find this other one at the bottom, fear for the downside, you can see a potential reversal. And at the end of the day, if you look on the right-hand side, you've got the opposite with the bullish candles. What you have to understand with the bullish and bearish candles, one secret here and one tip I'll give on this webinar is wicks, W-I-C-K-S. A wick will show you indecision of the market. So if the wick is to the upside, it tells you the market is rejecting the upside, that the bears are taking control. And if the wick is at the bottom side, it tells you the bears are losing control, the bulls are taking control. And if you find a wick at the bottom and at the top, indecision, the bulls and bears are indecisive, you need to wait for the next candle to close to determine where you're going to get into the market. So I'm just going to take a little 60-second break now. If you've got any questions, please put that into the chat box and we'll be back shortly. Hey everyone, I'm back again. So just give people a few seconds. So I've got a few questions coming in. Okay, now we move on to avoiding bad habits. How do we avoid bad habits in trading? So, one, trading too often. Just because you see an opportunity doesn't mean you have to take it. So, I mean, this is the overtrading. Revenge trading, taking a trade after a loss that you left you emotional will often lead to more of a loss. So take a breather, take a breath, look at your trading plan, and if you don't fix, don't take it. Remove in your stop loss. Your stop loss should be calculated before you enter a position, not after, and should never be adjusted unless you're breaking even or your trade is risk-free. How people get to that situation of losses. Why do people lose a lot of money in trading? Trying to get rich real quick, holding on to losses, trying to take profit early, blindly following the crowd, signal providers, and lack of knowledge. Lack of knowledge is one of the biggest things I've seen. Trading sins, as I say, deadly trading sins are really destroy your account, overtrading, revenge trading, holding on to losses, hide or ignore losses, which is pride, chasing bigger positions, which is hunger for success, chasing trades and profits, which is greed, and copying other people's trades when you don't understand the fundamentals and the reasons behind the trade. So these are what the main reasons I've seen people losing money in the markets. Always your position could end, and I said this before, a big win, small win, break even, or small loss. A big loss is not an opportunity if you bet it's safe with a stop loss. So just remember that for a minute. Swing trading, just to recap of what I said before, you can take in and out of the market, but try and limit your swing trades to about 2 to 3 days max. And if after a day and a half you're not in profit, look to exit that position, because minimize and cut your losses short. When you're trading false breakouts, how can you identify false breakouts? See, the candle broke a key level before closing. But after the candle closed, we can see that clearly it's unable to break that key level. And as you can see, you see the range, you see the double bottom, and you see the range, the market breaking up. So it's always key candle close. Always wait for the candle close to avoid getting into false breakouts. Sellout resistance are not at broken support levels. And you can see on this chart here, I've marked clear tops. So always sell from where you see the ticks and always buy where you see the crosses. You'll always be successful doing that. How to trade bullish and engulfing patterns. This is something I did recommend. I like to trade the engulfing patterns very well. And I do mention this on the fast track mentoring program and on the HTP. Some people on this Zoom call are part of the mentoring program, and they can testify and they see this, and this gives us the results. So the best time frames to trade the engulfing patterns are normally on the 4-hour, daily, 1 week, and the 1 month, not 1 minute. So I just put 1 month. Those are for aggressive, sophisticated, experienced traders. This is an example. Look at this chart right here. You can see clearly I've drawn my swing high, swing low, and I've got my resistance point. You can see price rejecting a key level here. I'm just going to annotate it real quick. Just going to take a little annotation here. As you can see a key level here. Right? And this key level, I'm pointing on there, you can see the wick right on top by the arrow. And you can see a demand zone right at the bottom by the 50% level, the wicks. And if you look beneath the wicks, you see the golden number 61.8. And the 61.8 level shows you a key reversal level as well. So this is why I know the market will always go back to test the most recent high. And we can get a low risk, high reward trade here, just like that. So this is how the market works. And, just simple strategies will always help you get out of trouble. Basics of indicators. I'm not a big fan of indicators, but I just thought, let me just put some indicators out here just to show you. MACDs for buying and selling, that's most people use it for. The RSIs for oversold and overbought levels. The 9 EMA is for a short-term trend. The 21 EMA is for entry and exit points. The 50 EMA is used for stop loss for most traders. And the 200 EMA is used as a long-term trend. And the ADR is used as an average daily range for determining stop losses as well. And Bollinger Bands are used for volatility levels. So these are just some common indicators that people use, but they do tend to lag. So just something I thought I'll share out there. Profitable trading strategies, price action, Fibonacci, momentum, and divergence are indicators you might want to use if you're starting out to build up your confidence. But I don't trade with indicators, and you can make some money too trading indicators, but you should not use indicators as your main decisive factor. It should be a reason to validate your trade, not as the main decisive decision maker. Now, coming to the books I recommend, these are some of the books I've read trading the financial markets, and these are books I have in my library at present. They are quite pricey, but each book is highly recommended. You can find them on the internet, but they've made me a lot of money. The first book came out last year. It's called The Psychology of Money: Timeless Lessons on Wealth, Greed, and Happiness by Morgan Housel. It's only about £10 53 on Amazon. You can even download, you can get on Amazon, or you can purchase it from any recommended outlets out there, or you can find it online, or you can find it on Kindle. Another book I recommend is Trade Your Way to Financial Freedom by Van K. Tarp. That's a good book as well. A little investment, but a lifetime of experience. One of my favorite books, Trading in the Zone: Master the Market with Confidence, Discipline, and a Winning Attitude by Mark Douglas. All my mentees have access to my shared folders with all my files with these books I've purchased, and I have copies of them that I share with my mentees. This book, Trading in the Zone, is a very hard to get book. As you can see, Amazon's. This is as of yesterday when I got it. Took a screenshot of Amazon. It's not back in stock until 5th of June. This book is very hard to get, but a very valuable tool in your trading career. Technical Analysis of the Financial Markets: A Comprehensive Guide to Trading Methods and Applications by John J. Murphy. This is an old book, but very effective as well. Wyckoff 2.0: Structures, Volume, and Order Flow. That's a bit advanced for traders by Ruben Villaharmaosa. But this book is very advanced. I will not recommend it for a beginner trader. I recommend it if you've got a bit of experience and you're managing about 6 figures. This is just volume 2. There is volume 1, which I'll share with you, which is on the other list. I'll share that with you. Top Forex and educational resources online. We have Daily FX, which is really good for education and news. We have Investopedia for education. You have FX Street for education and news. You have Baby Pips, a very easy go-to site. You have Forex Factory for news, and you have investing.com as well. Understanding trading emotions. Let's just summarize the emotions we've learned on this webinar. Lust, that's over trading. Wrath, which is revenge trading. Sloth, which is holding on to losses. Pride, hiding and ignoring losses. Gluttony, which is chasing bigger positions. Greed, which is chasing trades and profits. And envy, to cover other people's trades and success. Rules to follow when day trading. Control your emotions. Don't overtrade. Always take gains. Manage trade risk and trust your analysis. Track your trade records. Respect your stop loss at all times. Trade your trading plan and plan your trade. So that plan, if you don't plan, you plan to fail. So a routine will always bring consistent results. The biggest trading mistakes from what I've covered today and what I've observed. So some of the points, I'll always reiterate the points again, but in a different form or a different slide, just to send out the same message. Trading with no stop loss. Without a stop loss, you risk losing more than you expect. Over trading, forcing trades means less high quality trades and more losing trades. Not learning. You should continuously learn and improve your trading. Comparing business and trading. In a business, you have revenue, you have costs. Revenue is what comes into the business. Costs are what go out of the business, which equals profit. But in trading, winning trades is equivalent to our revenue. That's what brings in the money. Losing trades are the costs of this business. So winning trades minus losing trades gives us our profit. So we need to focus more on our winning trades. How can we be an effective winner? By investing in our education, getting more knowledge, and holding ourselves accountable and improving our psychological mindset. Because at the end of the day, the education out there is free on the internet. You don't need to work with me. It's free on there. You just need to be disciplined and give yourself a trading plan and put yourself in a position to win. People who want to work with me just want to fast track their results based on my years of experience, and they believe in what I share and they just want to learn more. That's the only difference. You can still get the same quality out there on the internet by networking and meeting like-minded individuals. The only difference with me is my experience and what I do consistently, and people want to have a relationship with me. And unfortunately, that comes at a cost. I wish I could give my time to people for free, but I cannot, because if I'm giving away my free time, I cannot focus on trading and I can't make money. So there's a balance being a trading mentor, a coach, and a trader as well. It's all about balance. Half the time when I'm mentoring and teaching, I'm actually trading myself. My mentees will tell you that. So I'm not losing on either side. It's a balance. But to give my time away for free, that's disrespecting the value and years I've spent learning the skill set and the losses I've encountered on the market. So that's just for that. 8 topics that you should include in your trading plan. And please take note, what time are you going to trade? You should always have a clear and defined time and day of the hour when you will trade. When will you do your analysis? Is that end of the day, in the middle of the day, in the morning, or end of the week, whatsoever? What pairs are you going to trade? In order to be a successful trader, you don't need to trade all pairs. Just be sure on the pairs you want to choose with the expectancy of giving you the right results. What strategies will you trade? Sometimes less is more. You don't need to know them all. Make sure you follow the rules and your strategy strictly. What are my rules of engagement? Always know when to get in the market and to get out of the market. Respect your risk to reward and your position size. What time frames do I trade? It might be tempting to trade all time frames, but you only have time to check charts probably once a day, twice a day. Depends on your commitment. Stick to one time frame and build your strategy around it. What are my golden rules? Basic principles you should always follow to make sure you got consistent success. When should I stop trading? Things that would jeopardize your growth, such as when you're not feeling too confident, when you're emotionally unstable, when you're angry, when you're revenge trading, when you're FOMOing, and all the emotions I mentioned before. These are the times you should stop trading. Back again, the books, I've added some more books. The Compound Effect is not related to trading, but it's very good for your mindset. It's called The Compound Effect, Jumpstart Your Income, Life, and Success by Darren Hardy. That's another book that's in demand. Whenever you go in Amazon, you see that disclaimer, dispatched within 2 weeks, 6 to 10 days, a month. It tells you that book is very good. It's very good that people are buying it. So if people are buying it, clearly there's a lot of value in it. Psychology of Money, Timeless Lessons on Wealth and Greed and Happiness by Morgan Housel, as I mentioned before. Trade Your Way to Financial Freedom. Trading in the Zone, as I mentioned before. Technical Analysis of Financial Markets, A Comprehensive Guide to Trading Methods by John J. Murphy. Wyckoff Theory 1 and 2. The Methodology in Trading Wyckoff, Volume 1 is below. Trading and Investing course. It teaches you everything you need to know by Ruben Villaraigosa. And you've got volume 2 there as well. So altogether, it's just an investment of £41, which is nothing. What you learn from Wyckoff Theory will take your trading to the next level. But I recommend it's not for beginner traders, it's for advanced traders. If you've got the confidence and you're managing a big trading account of 6 figures and above, or you're trading with a $10,000 account or $5,000 account, Wyckoff Theory is a good concept to understand. Once you know it, you look at trading differently and you're going to drop the indicators altogether. The top 2 psychology books that one of them is mentioned, the other one's not really mentioned. My top 2 books, this is a new one. It's called No Nonsense Forex Trading Psychology by Patrick Victor. That's a very good book, a very hard to get book, but very recommended as well. And the Mark Douglas book, as I just mentioned before. As a trader, you must realize your risk and reward changes every time you're in a trade. For example, if you trade with 5% risk and 15% reward, but once you're up by 10%, now you're risking 15% to make 5% if your stop loss wasn't moved. So always make sure you get the balance of risk to reward. Understanding your emotions, again, like I said, I always reiterate certain points just to make sure we understand the whole concept of this webinar. Lust is over trading. Wrath is for revenge trading. Sloth is for holding on to losses. Pride is hiding and ignoring losses. Gluttony is chasing bigger positions. Greed is chasing profits and trying to build up a balance when you know you're not really doing the right thing. Envy is coveting other people's trades and success. The best pairs to trade as of now, as of the last 6 months from what I've observed, with high volatility, low spreads, and highly traded and less manipulation, and what I've seen most of our traders trade, the euro yen, the pound yen, and euro US dollar. These are the three main pairs I've seen a lot of traders trading combined with these pairs and combined with other pairs. But these are the three main ones I pulled out to show you how people are hitting their 10%. A professional trader has a system and he does not jump around from one system to another. So as a professional trader, stop jumping around from system to system. Just stick to one and you'll be very successful. Learn to be a master of one method than a master of many. And this brings us to the very end of the webinar, the Forex and Mindsets and Psychology webinar. Thank you everyone for your time. I'll just take a minute and I'll take any questions Leo relay to me and I'll answer them as much as I can. And thank you for your time and participation in this webinar. Okay, hi everyone, I'm here. I'm going to take some of the questions now and I'm going to start answering the questions one by one. Okay, I got 14 questions here. So some of the questions I've actually covered on the webinar, so I'm going to start taking the questions. Thank you very much, everybody. And yes, I see there's a lot of requests. Everyone wants the PDF version of this. I will make the PDF version available, as I always say, but I just ask for one thing. Leah will release a recording of this video on YouTube at some point. And when she does, just leave a positive review and some feedback on how you found the session. And if you like it, as soon as you do that, Leah will release the link to the PDF for you to download. Okay, how much does an average trader make a year with prop trading? I'll go the last 18 months with the pandemic up until this present date today. On average, on the FTP and HTP combined together, so I'm going to go with the highest trader and the lowest trader, and I'm going between. So on average, the average payout I've seen is probably $1,500 up into 125,000 euros in total. 125,000 euros on the upside, but on average, when I say 1,500, I'm not just saying one person. I can say hundreds of traders have probably been on the 30,000 account and they're still on it and they've got payouts of 1,500. And if I take the average from the low range, from the high range, and in the middle, so I'll say the average payouts from of our traders has been from 1,500 to 125,000 euros. Okay, second question. And I'll come onto the app after I finish. Is it possible by chance permission to only trade the NASDAQ 100 and US 315 account? The FX, the 15K account was built specifically for FX. But what I can say is when you're on six figures, 240,000 and above, there is a lot of flexibility. The risk manager does open the door for you to trade the NASDAQ 100, gold, silver, and the US 30 because you're a proven trader and we can see a lot of consistency, and that is possible. At the 120K level, no, that won't be possible. So that if that answers your question, what is the HTP fast track? Basically, the HTP is a hidden talents program, as you see on the website, where you spend 4 weeks with me learning how to trade the financial markets. I give the basic training to make you a confident trader. And after the training, we allocate you with company funds to trade with no track record because you've been trained by me. For traders who are good enough and reach 500K, is there a higher capital limit than that? What's the maximum cap? No, unfortunately, the system is capped at 500K. So when you get to 500,000, you just need to keep on doing what you're doing, just like Vladislav. And Vladislav has hit the 10% level quite a few times on average every 7 to 8 weeks. And anytime he hits his target, we have a conversation. I tell him to challenge himself in a different way. What can you do better? What can you do differently? And he shares his experience with you on the video review that we do together. So I have a few more videos with Vladislav coming up in the near future in the next few weeks. So just pay attention to YouTube channels and watch the reviews. I always drop nuggets and clear tips on that. If we cannot make 10% this month and lose 5%, 6%, can we carry on to the next month? The whole point is that no one's got a gun to your head. You're not under pressure to make 10% like other trading prop firms. All we ask is you don't hit the drawdown of minus 10%, which is 13,500 on the basic 15,000, and it's 10% as you go up to the highest level. So far you're maintaining the account balance within the drawdown. That is fine. When you hit your 10%, you definitely get your payout and you move up a level. Can you recommend a program for backtesting or simply empty for previous months? Backtesting, I don't really like using that word backtesting. If anything, I'd just say just practice your strategy on TradingView and look at the market itself and see how your strategy plays out in real terms, because demo trading will not really be reality for you. So sometimes on average, people take 4 weeks, 12 weeks, 3 months, 6 months can hit 10%. But it's all down to the individual trader. We've had some record breakers this year who've hit 10% in 4 weeks. The biggest record breaker was 1 week. And I'm sure that I can't remember who that trader was. There are quite a few traders who I'll be putting together real soon. The traders who've broken the 10% on the 15,000 account level within record time. I'll be having a conversation with them sometime in the future. We're just phasing back into the office. So when the time permits itself, I'll be having a conversation with all of them together. How can you improve your mental mindset of trading? For example, not being angry and lost in a position. That is very simple, as I said before. If you follow this webinar, watch it again, take the tips, and invest in your psychology by reading the books I recommend. And these recommended books will definitely in tune help you. That's stage 1. Stage 2, I recommend the fast track program if you're already trading, where you'll be mentored by me for 2 weeks. And that support will help you fix some problems. And everybody who's worked with me, they can tell you the value and the confidence and what they've got in return. So that's a personal choice for you to work with me or not. But if you don't want to work with me, you can still get the same results. It's just going to require a lot of hard work and mental discipline, and just follow the tips for free. I give a lot of value for free. The only thing I will not give people is my precious time, which I'll charge you for it. The list of books recommended, that's already been covered. I have an exit strategy, like 70% of my trades are good, and when the trend goes over in my favor, but I end up in losses. Can you help with anything? It's not when you're trading and you're losing money. Sometimes it's not necessarily down to the psychology side of things. It's just down to being visually alert. You spot the market reversal, just leave. Take your money and leave. And that's all you need to do. How to recognize a pin pile candle from a simple candle, indecisive candle. It's all there. If you want to understand candlesticks, I recommend the Candlestick Bible. It's all over the internet. It's a free PDF. Read the Candlestick Bible, it will solve half your problems. You've got 70% chance of correcting your mistakes if you study the Candlestick Bible. If the wick is on the upside, what does that? The wick. Wherever you see a wick on any candlestick to the upside, it tells you rejection. On the upside, that means price is going down. And when you see a wick on the bottom side, it tells you rejection, that price is going up. How to avoid multiple break-even trades? Should we leave the opportunity alone? This is a personal question. It all depends on when you're in the market. But if you read the recommended books, you work on the psychological mindset, you have the trading plan as I've explained, you will not have that problem. Regarding double tops and double bottom M&W patterns, what time compressions work best for your preferences with these chart patterns? But Richard Hargrave, what I can recommend as well, there are quite a few questions, and some of these questions are quite at length. I can recommend, I'm going to type into the chat now. If you actually contact me directly on the AudaCity community app, I can actually go at length and answer your questions. So just go on the AudaCity community app, look for me, John Ozzy, you see a green badge, just send me a direct message and I can go at length with that. And the M&W patterns are more effective on the daily time frame, the 8-hour time frame, and on the weekly time frames. Sometimes on the lower time frames, but you have to work your way from the top to the bottom. So yeah, that's it. Could you explain a bit more on Fibonacci? Fibonacci, yes, Fibonacci retracements are just simple. It's when price is on a trend line and price is looking to reverse or pull back to go back higher. So that's just what it is. It's very simple, and it's a simple concept which you can learn on YouTube. You can, and you can always just play around with it. It's very effective for entering the market. For traders who are good enough that reach 500K, is there a higher capital limit than 500K? No, 500K is the maximum limit, and the people who are on 500,000 are making consistent profits and they're earning six-figure salaries from trading. Vladislav and a few others are doing quite well. So it takes on every 8 weeks, on 7 to 8 weeks for some of the traders to hit their 10% targets. And chances are, for the very best traders, things are changing. Business is always adapting. So chances are there's an opportunity to even manage $1 million, who knows? But the opportunities are there. It's down to you as traders to prove yourselves that you can be trusted with big capital and you can make money consistently, because it's a win-win basis. If you win, the company wins 50-50. There's nothing more to it. So if that answers your question, the more successful you are, and you've got a proven track record, then the growth potential is unlimited. And can you trade for other companies? There's no gun to your head. You're not under contract. You can go to FTMO. You can go to 5%. You can go anywhere you want. But all I'm saying is, and all we always say is, as a trader, it's always best to have all your eggs in one place. Not that I'm saying that you can't make money with these other prop firms as well, but I'm just saying when you're managing big funds, you need to have that psychological mindset. And it's always best to focus on one place. So if you've been successful with AudaCity, it makes sense to focus with AudaCity and keep on making the money at 500,000 if you're successful, and you will be successful if you work hard and get there. But when you want to go from 500,000, oh, I need more money, you will come into what I mentioned before, greed and the emotions of trading, because you want more money, more money, more money. It's coming a sport. It's not coming a hobby. It's not coming a routine. It's now coming a greed thing. You want more money, more problems. So always control your desire for greed and enjoy the concept of trading. So guys, thank you very much. I've answered all the main questions here. It's been a pleasure. Tomorrow, I'll be doing a Q&A on the AudaCity community app, where I'll take a few more questions and I can go over the webinar and I'll answer more questions at length. I'll do that for an hour. That'll be at 1600 hours British Standard Time, 4 p.m. tomorrow afternoon. I'll be doing a Q&A. You can ask me any questions. So I'll be happy to take any questions live tomorrow. And also, I will definitely try and make a replay of this recording for people who missed it. Thank you everyone for your time and have a great evening. Thank you very much. John Ozzy out.